Hey guys, what is going on? Welcome back to the portfolio. As always, hope you guys had a fantastic day of trading today. And again, want to start off the video by saying thank you to all the subscribers, all the viewers out there, showing the channel so much support. Immensely appreciate it. If you guys do like the content, if you do like the video series, feel free to like, share, and subscribe. And if you are a subscriber, make sure to hit that bell button to get alerts and updates on all new content posted on the channel. Today I thought I'd do another portfolio overview video showing you guys exactly what's in the portfolio. As you know, I try to do at least one or two of these per month, depending on how much activity is on the account, highlighting major sell-offs, acquisitions, and just talking a little bit about what I want to do with the portfolio over the next several weeks. Up on top there, you can see the portfolio did not do so hot today, down almost $1,000 there, $999.26, representing 0.71% of the overall portfolio. And this is in context to a little bit of a mixed picture with regards to the three major indices. The S&P 500 was up 4 points, 0.15%. The Dow 30 was also up 119 points, 0.49%. But the NASDAQ technology was down a bit, 12 points, 0.19% in the red. So having said all that, let's jump into the portfolio. Again, I have all of my stocks segmented as far as market sector. And I'll kind of highlight those to kind of show you guys what's in each individual market sector. Again, there's been a lot of questions on the channel. Why do I only have a share of some of these stocks? That's because when I first opened the portfolio, first established the portfolio, I tried to buy a very broad range of stocks representing all market sectors. They kind of learn about how each of the market sectors would move based on some macro, news-oriented stuff, and just overall, if one industry goes up, how do the other industries, or how are they affected? And since I established the portfolio, I've just kind of kept those stocks in the portfolio. Don't really do a lot of trading with them, but it's kind of fun to see exactly what happens in any particular market sector because, again, I have a very broad representation, and you can very easily see what's happening in each individual market sector based off the portfolio. But to answer a lot of you guys' questions, no, I don't do a lot of trading with those stocks. It's simply those were the first stocks I bought with the portfolio, and I've just kind of held them in the portfolio without doing much trading with them at all. So again, having said all that, let's kind of jump into the portfolio here. Up on top, I have my high dividend yielding ETFs, first starting with DVY, iShares Dow Jones Industrial Dividend ETF, SCHD. Let's kind of jump into the portfolio like this, and I'll kind of switch back and forth to give you guys an overview and then the name of each individual stock. So the first stock here, DVY, iShares Select Dividend ETF. And on the bottom there, you'll be able to see the number of shares I have as well as the total equity value. SCHD, a Schwab US Equity ETF. And these are all very large, high dividend yielding ETFs here. SDY, SPDR, S&P 500 Dividend ETF. Again, on the bottom, you can see the shares as well as equity value. SPHD, a PowerShares S&P 500 High Dividend Low Volatility ETF. This is one of my favorite ETFs. I actually have quite a bit of this in my E-Trade account. You can see I have 26 shares here, 110708. I like this because it has a monthly dividend, especially for new investors. It has a monthly dividend and the price is very reasonable, only $42.58 currently. So it's very easy to jump in. Even if you don't have a very high portfolio value, you can buy a couple shares of this and watch those monthly dividends come into the account. And really, the whole point about establishing investing is getting excited, learning about investing, and this, I think, is the perfect stock. The only downside with this stock is that it has a very high expense ratio. All ETFs will charge investors a particular percentage. This one is 0.3%, which compared to VYM here, a very good Vanguard high dividend yielding ETF, charges 0.04%. So you can see the quite large difference in the fees that are charged. But again, this stock here is much more pricey, a little bit more difficult for investors with smaller portfolios to jump into. But SPHD here, very good monthly dividend ETF. And this one here is quarterly, but also a very good dividend yielding ETF here, a Vanguard fund with very, very low expense ratio. I only have one here, but in my Vanguard account, I actually have quite a sizable holding of this particular ETF, as well as VOO, which I don't currently have in this portfolio, but in my Vanguard portfolio. So going back to the overall portfolio here, those were my high dividend yielding ETFs. Below that, I have my healthcare stocks. First was pharmaceuticals, ABBV there, AbbVie Incorporated, Again, one of the first stocks I had purchased with the Robinhood portfolio. This has been doing quite well over the past year here, 62.17%. Really all pharmaceutical stocks I hold have done very, very well. Eli Lilly and Company, 30.89%. Pfizer here, one of the first stocks I bought with the portfolio, up 19.93%. And Portola here, as you guys know, Portola has been the very high-risk speculative play I've been doing some day and swing trading with, as well as a little bit of a longer hold. You can see on the bottom there, I have a very sizable holding, 897 shares, 44,159 current total equity value. So very, very risky stock, a smaller biotech stock, but you can see here the great performance over the past 1 year here, up 166.25% with one of the best one-day trading sessions in my portfolio, up about $10,000 to $11,000 over just a couple of minutes of trading here. And then at one point it was up almost $18,000 before coming back here quite a bit. And it's been kind of jumping up and down, which I have been taking advantage of for some day and swing trading. And also in pharmaceuticals, I have some healthcare companies, Abbott Laboratories here. Again, these have been doing very, very well. Save Cardinal Health, this has not been performing well, down 15.29%. But overall, Abbott Laboratories as well as Johnson & Johnson have been doing extremely well here. 29.83% for Johnson & Johnson. So below my healthcare stocks, both pharmaceuticals and healthcare services companies, I have my industrial stocks. First starting here with Boeing. This has got to be one of the best stocks in the portfolio with regards to one-year return. You can see they're 91.34%. And over the last 5 years here, up 345.07%. This is a very large cap blue chip company, very, very safe investment. It's got a very good dividend yield as well, 2.8%. So this is your quintessential buy and hold stock. Hold it for the long term, great dividend yield and great capital appreciation. Also in industrials with aerospace, Boeing as well as Lockheed Martin here, another great stock over the past 1 year, 28.7%. Then I jump into my conglomerates here, GE, as you guys know. And as you've probably seen from my prior videos, has been struggling over the past 1 year here, down 41.5%. Kind of represents a contrarian investment. If this dips below 17, if it dips below 16, I'm definitely going to jump in with a sizable investment, probably $5,000 to $6,000, maybe $7,000, because I do think over the next few years this should bounce back very nicely. But it is a very high-risk type of investing strategy. Buying stocks when they're down like this, it can have very, very good rewards, but this could also go the other way and kind of do what a Sears did and just go to nothing. So very high risk, but high reward. That's kind of the theme in the stock market. The more risk that you're willing to take, the higher reward you could potentially receive at the end of your investment. So very high risk there, but definitely looking at $16 to $17 to jump into GE. 3M here, another great blue chip company. Very good performance over the past year as well, 35.97%. But this is really in context to the whole market performing exceptionally well over the last several years. One of the I think it's actually the longest bull run now in the stock market history. Please correct me if I'm wrong about that, but definitely one of the top 3 largest bull runs ever in the stock market. So take that into consideration as well. There may be a correction here in the next year or two. I have a couple, actually just one machinery stock here, Illinois Toolworks, ITW. A couple railroad companies here, CNI, Canadian National Railroad, UNP, Union Pacific. Again, just to remind you guys, on the bottom, you can see the number of shares I have as well as the equity value. One supply company here, International Paper, and then one chemical company that was a merger between Dow and DuPont, DWDP now. Very good performance as well over the past year, 6.77%. But again, that's in context to this company just merging here from Dow and DuPont. Both of those were up, I think, about 20% each. So very, very good performance with Dow DuPont. Now to go back to the portfolio here, we'll jump into my largest holding as well as switch over to consumer discretionary here with Ford Motor Company. As you guys know, I have a very sizable holding here, one of the largest, I think it is the largest holding out of all of my stocks, both on E-Trade, Vanguard, as well as this portfolio here, 42.25 for shares, 53, 192.75 for equity value. You can see that very nice performance drive up here. Contrarian investment, I was initially thinking really trending down here despite record profits by the Ford Motor Company. So I went ahead and jumped in this area right here. And as it started falling, I started averaging down. And so far, the return has been very, very good. And it's also been a great day in swing trading stock, although I don't do that much anymore because of the tax implications of the first in, first out accounting method. And just to kind of follow that up as well, with the new tax code that may be coming out, apparently they're going to do away with the ability to sell off specific tax lots. I've talked about this on the channel for quite some time. On other brokerage accounts, you can select exactly which stocks you want to sell off when you do sell off. If you've bought, one stock 15 different times, you can essentially pick exactly the stock you want to sell off to get the tax benefits of holding a stock for the longer term. But with the new tax rules, apparently they're going to erase that and get rid of that. So it'll be kind of interesting to see what happens with that. And once I know a little bit more about that, I'll put out a video specifically on that new tax regulation that may be coming through. GM here, General Motors. Again, just one share, one of the first stocks in the portfolio, another automotive company. Below that, I have some electronics companies, GRMN, Garmin, one retail company here, Target. Performance was off quite a bit here. It's been rebounding ever so slowly. Another type of contrarian investment. Could be a very good play in the longer term, but it has a lot of stiff competition from a lot of online companies right now. Some restaurant companies as well, doing very well. McDonald's, Yum Brands, as well as their offshoot company, Yum Brands China. And then jumping into textiles here, VF Corp. Very good play in the portfolio. Not only 31.84% up over the past year, but also very good dividend yield there, 2.868%. So that kind of rounds out the consumer discretionary. Let's go ahead and jump into consumer staples, all the way down to Archer Daniels Midland, another one of the first stocks in the portfolio. Was doing right, but then it kind of came back here. Let's see if here we go. So it was doing okay. I jumped into the stock right around this area here. It was doing okay and then really dropped off here. Another type of contrarian investment here. I picked up another share down here. Did some day and swing trading with our Archer Daniels Midland for a while. But interesting stock. Not quite sure I'm going to put a lot more money into that one. I have Cisco here, foodstuffs, 61.84. It's done okay over the past year, especially over the last month or so, up 14.22%. And then some very large staple companies in consumer staples, very nice and long-term blue chip stocks, Colgate, CL, Kimberly-Clark, KMB, Hershey, HSY, Kraft Foods, KHC, some packaged goods and personal goods here, Procter & Gamble, PG, and then some beverage companies surround out the consumer staples, BUD, Anheuser-Busch, KO, Coca-Cola, PEP, PepsiCo, and then we switch over into financials here. I have, I think, 5 different financial stocks, if I remember correctly, starting with BOFI, Bank of the Internet, a stock that's had a very interesting past here. As you can see, very good performance over the past 5 years, 307.55, but you can see these big, large spikes up and then down. So very good stock to do some day and swing trading with as well, which I have done somewhat, but I like to keep this stock for a buy and hold. I think this is a good play probably 5 years from now, so I don't really want to do a lot more than that. Huntington Bank shares, Morgan Stanley, MS, Wells Fargo and Company, WFC, one insurance company here, ORI, Old Republic International. Again, one of the larger and longer standing dividend companies. Let's see, there we go. 3.947% for dividend yield. I think this is a dividend aristocrat if I remember correctly. Then we'll jump over into technology. Let's go down to IBM here. This is the first stock here in information technology. IBM, AAPL, Apple. Phenomenal performance over the last 1 year, 53.86%. And as you guys probably know, over the last 5 years, it's up 160.9%. Very, very good performance. And it's also recently established a dividend, as you can see in the middle there. Not high by any stretch of the imagination, but very good for a blue chip technology stock, 1.557% for Apple. AMD, a stock that's had quite a bit of volatility, as you can see here. Just a few years ago, it was trading in the $2 to $3 range before jumping up over $12, $13. So a lot of money has been made. A lot of this has to do with cryptocurrency, script coin mining, Litecoin mining. I used to do a little bit of that in the past. Kind of wish I would have done more of that, as the price of Bitcoin, I think, jumped up 50% today. It's over $380, which it was just $4 just a couple years ago. So that has a lot to do with the driver in AMD and some other of the graphic stocks as well. Nvidia comes to mind. Intel, INTC, and Microsoft, MSFT, round out my information technology. Beyond that, I just have a couple telecoms here, AT&T, and both of these telecoms have great dividend yields, 4.5% for AT&T, and for Verizon here, you can see in the middle, if I can find it, 4.281%. Beyond that, I have some other stocks, and I'll probably just continue going in this format here since there's only a few stocks for each of these market sectors. Energy, XOM, 11 shares, almost $1,000 for ExxonMobil. Utilities, I have a couple companies here, CenterPoint Energy, CNP, Consolidated Edison, ED, and Southern, SO. And then I have some real estate investment trust here. These are some of my favorite stocks. Tax-wise, not great investments, but they have very nice dividend yields. APLE among one of my favorites because it has a monthly dividend and it has very good performance so far anyway over the last year, 6.38%, which doesn't seem that high, but if you take into consideration it's paying out 6% dividend yield annually with monthly installments of its dividend. Very, very good dividend stock. FRT, a Dividend King, I recently put a video out. And on the surface, it doesn't seem like a great stock, only a 2.7% dividend yield. But this has been increasing its dividend for the past 50 years while giving the dividend as well. Hasn't missed dividend payment in over 50 years. Quite incredible for a company. O Realty Income and STAG, Stag Industrial. And then I have a few other oddball stocks to round out the portfolio. Business development companies, closed-end funds, one bond fund as well. Guggenheim, GOF, PCM Fund, Prospect Capital, PSEC, PTY, PIMCO Corp, YYY. This is an ETF, very cool, high dividend yielding ETF. You can see the dividend yield here, 9.677%. This is an ETF of business development companies like Main Street, PSEC, a lot of these other very high dividend yielding companies. One bond fund, like I said, BHK. And then just a few penny stocks I had picked up along the way. This one is no longer tradable on Robinhood, MARA, ACERW, another warrant no longer tradable, and SDR. So that is the stock portfolio here. Those are the stocks currently in the portfolio. I'll go all the way to the bottom here, just kind of scroll up very slowly here so you guys get another view of everything in the portfolio. Again, $140,000 portfolio, rounding up more or less $1,000 down today. I'm going to call it a $140,000 portfolio. So yeah, as always, let me know what you guys think about the portfolio, what you guys would change, what you guys would add to, or any big things that you are doing with your portfolios. Always hear exactly how you guys are managing the markets. And also, what do you guys think about a pullback at some point over the next year or so? Like I said, a historic bull run in the stock market. It's got to end at some point. It always will. It just matters. It just depends on when it does. That really matters with regards to how you're going to be doing your longer holds in the stock market. I'm having probably 15 to 20% of the portfolio in cash. I'm going to really keep that there until it starts pulling back. And then I'm going to average down some of my stocks. Very hard to time the market, so I'm simply going to have that on the sidelines. When it does start to pull back, I'll average down, and hopefully on the next bull run, I'll have a very, very good return. So again, not to make the video too long here. I think it's quite long already. I'll kind of end it here. As always, if you guys enjoy my videos, feel free to like, share, and subscribe. And until next video, we'll see you then.